Welcome to the Entrepreneur Motivation Podcast. I'm your host, Chris Bello. Today we've got Kent Ritter on the show. Kent, welcome.
Thanks, Chris. Happy to be here, man.
Happy to have you. And Kent is the CEO of Hudson Investing. And we're going to talk about real estate, mindset, productivity, scaling, troubles with scaling that you're running into, all the virtual assistants that you have, and more. So if you want to go ahead and introduce yourself, man, who is Kent and what is a little bit about your past and what are you up to these days?
Yeah, sure. So, I'll take you guys back a few years. So I started out my career as a management consultant. And what you do as a management consultant is essentially you fly around the country and help big companies solve big problems. And so in that 12-year career, I got really good at understanding, what works in businesses, what doesn't work in businesses, got to see a lot of different businesses, more of what doesn't work because nobody calls you when things are going well. Right. But I really got a good understanding of, what levers can you pull to really impact a business, right? And I noticed similarities over time. And the other thing that I was really able to benefit from is just the experience in leading these large scale engagements. And by the end of my career, I was leading multi-million-dollar projects and just the ability to communicate well, manage people, communicate at a high level, speak with folks in the boardroom and be able to convince people that change is a good idea and that they should go through change and then be able to guide them through that change. Because ultimately that's what gets in the way of all those projects was that, people just don't like change. And that's just a human trait. Right. And so that career really set me up well once I moved into real estate investing. And so to move forward a little bit, in 2010, some colleagues and I left the firm we were working at to start our own consulting firm. And over a 5-year period, we grew that from literally 5 guys, around a kitchen table, like the startup story you hear about, to 95 employees and 30 million in annual revenue. And then in 2015, we decided it was time to sell that. And that was really what kicked off my real estate career because, I had capital now. That adventure was over. And I honestly didn't really know what I wanted to do next. Yeah. And I knew I didn't want to put all my money in the stock market and just ride that roller coaster. So I started looking at different alternatives, alternative investments, and real estate really spoke to me for a number of reasons, the ability to have regular cash flow, asset appreciation, the tax benefits. There was a lot of things, the non-correlation to the stock market, right? A lot of things I really like. So I dug in, kind of head first, all the podcasts and books and everything you could listen to, went through a couple of coaching programs, started investing passively with other people. So I learned about this thing called syndication. And what that is essentially where you can pool your money together to go out and buy a bigger and better asset than an individual would be able to on their own. And I was like, wow, that's incredible. Because what I originally thought of when I was going to get into real estate was I'm going to buy single families and be a landlord. Right. The only problem was everybody I talked to that was doing that hated their lives because they were getting calls at 2 a.m. about leaks and, all kinds of stuff. And so I learned about, multifamily, I learned about syndication. I'm like, man, for me, coming from a finance background, coming from the kind of the management consulting mindset, I was like, wow, I think there's a lot of value that we can add there. And so I knew there was a lot I didn't know. And there was probably a whole lot I didn't even know I didn't know because I was brand new in this. So what I started doing was I started passively investing with other people first, people that were doing this, and started giving them my money. And in doing that, I was able to get kind of behind the curtain and kind of see, okay, how does this all work? How are the deals structured, right? What are the terms? How does this work? What are they doing? Why are they doing it? And able to ask a lot of those how and why questions of the sponsors. Because I invested in 10 deals in 2016 across a handful of different sponsors. And so I was able to get different flavors, see what I liked, see what I didn't like. And I did that until 2019. In 2019, in October, completed my first active syndication where I was a member of the general partnership that was actually leading the deal. And then from there, the rest is really history. We did 3 more deals in 2020, another in 2021. And now we've got 3 deals under contract actually right now. So awesome. things are moving. And as I did that, it was kind of a winding path just to just to give you the last piece of the background, a little bit of a winding path. I started out on my own, building out my own business, Hudson Investing. And then I really put Hudson Investing on the shelf after that first deal because a mentor of mine who owns a large private equity firm, he asked me to come on board and partner with them and build my company off their platform with really the idea that I could grow 10x on their platform of what I could on my own. And so in 2020, I thought that was compelling. In 2020, I joined them as a large firm, 15,000 units, that they own and have under management. And so I spent about a year, about 15 months there, just learning at a very high level, kind of how the best in the business do it. And I learned a ton. I think I was able to provide them a ton of value from my consulting background. So it was a mutual value exchange. But at the end of the day, just an entrepreneur at heart, I needed to be back on my own, under my own banner. And so I guess it was, it was like May. God, it seems like so much longer ago. It was just like May of 2021. I set it back out on my own, and here we are in July, and we're full speed ahead.
Yeah, it's funny that you say that. I actually heard this on a Bigger Pockets podcast yesterday where I think Brandon Turner was talking about how as entrepreneurs, we want to work with other entrepreneurs. And then we realize that they also don't really want to work a whole lot, or at least not for a long time. Like they want to build up their business and then they want to go scuba dive, coral reefs and stuff, or go to Australia or whatever. And so I had a conversation with someone this morning for that very thing. We kind of talked about partnering up and had a similar thing. Like, ultimately we both have different visions. He wants to go scale this thing up, be a crazy company, have all these different, companies that tie together. And I'm more like, hey, I like the 4-hour work week. I've read that book 3 times. I'm kind of living that. And so you got to go under your own banner, right? I love that you said that you kind of went off on your own, but you saw the value in partnering up and really going behind the curtain and seeing the processes. What do you like? What do you not like? And I guess you kind of have that consultant hat because you did that for, you said 12 years?
Yeah.
Awesome. That was something that I wanted to do
like
for a while.
4 times longer than I thought I was going to.
That's quite a long time.
It was a good run.
Yeah. And you learn a lot because I have quite a few friends that I worked with in my corporate job. And a lot of them went to like McKinsey and Bain and Company, I believe is the name. Yeah. And they were, flying out every week and doing cool projects and helping huge companies to save millions of dollars and all these amazing things, which gave them amazing experience for whatever they went on to do next. And so I'm sure you're able to kind of peek under the curtain and identify problems and see, hey, based on these case studies that we've done at other companies, what's the best situation or the best solution to apply here? So it's kind of cool to hear about your journey of just, you have such a diverse, journey of information that you've received from companies and problems that you've solved.
Yeah. It is, consulting is a fascinating career. You get, I don't know who it was at some point, a mentor of mine say that, like every year in consulting is like 4 years in the industry because all you're ever doing is solving problems. Like there's never just like a steady state, like good, people are just chilling, going to lunch, like that. There's never that. It's always fire drills. Projects. So it is true. I think you get it is a great career to get a lot of experience in a short amount of time. But yeah, that Monday to Thursday grind, like that wears on you. And I didn't do that the whole time. I did that for about 6 years. And then I moved, as I moved up in the company, it became, more travel as you need and more sales things as that. But anyway, the biggest takeaway, I think, when I apply it to real estate investing is, I think a lot of people look at real estate investing as you're buying this asset and it's just like this thing, like this house that's sitting there, right? I look at it as buying a business. You're buying a business. You're buying revenue. You're buying expenses. You're buying profits. And I think if you understand it in that way and you look at it in that way, then it gives you a different perspective. And so, it's not this thing that you own and is just kind of sitting there, but it's this like living, breathing business with all these parts that operates really just like any other business does. And a lot of the deals that I do are fairly low risk because these businesses have been there often for 20, 30, 40 years, cash flowing, making money. I don't do a lot of distressed stuff where you got to come in and it's in the red and there's nobody in the apartments. Like typically the deals I'm doing, they're doing okay. We just know that there's some low hanging fruit or there's better management practices or technologies that we can put in to make them run better. And so, I like that risk profile. It's on a risk adjusted return standpoint. I don't think there's many things that beat that. It's this business has been here for 30 years, like something catastrophic would have to happen for it to go belly up.
Love what you said there too, because I have come across many people and I've met people from being in real estate for a couple of years who have moved on from single family to multifamily to now, apartment complex type deals. And they kind of share the same sentiment of, I was managing a couple of single family rentals and people were always calling me for minor issues and leaks and, toilets and all those things. Whereas when they consolidated to, multifamily or an apartment complex, you've got a property management company, you can budget for those things, you have an actual team, and you treat it as a business instead of like two rentals that you're kind of managing on your own. And so when you do it that way, you're able to do it properly and have people in place to handle those things.
Yeah. And I think one thing that you said is important of even just thinking about like a budgeting process, right?
Yeah.
Like, which is normal in any business. And the reason you do that is because you're trying to forecast, right, for the future.
Right.
That doesn't happen a lot on like the single family rentals and stuff, or something you're doing on a side project. But like, I mean, that's something that we put so much time into, the proformas and the budgets and making sure that not only do we think our assumptions are valid, and we're going forward with our most likely scenario, but we also have reserves and things in place for the stuff we don't expect to happen. Right. And so having the cash reserves for things like if we buy a property and the roof's 25 years old, we're going to put money aside to replace that roof, even if it doesn't need it today, because it very likely could need it in the time that we own it. And you never want to be in a position where you're scraping for cash, under your floor mat in your car to try to pay for that new roof. You want to know that money's set aside and it's safe there. And if we don't use it, great, right? That gets returned to the investors.
Yeah, that's the hardest thing to do for new entrepreneurs, especially because they're just trying to do deals and get some money saved up. And then it's like they're robbing Peter to pay Paul type thing. Is your lighting kit starting to fall apart over there?
a little bit. Yeah. I was telling Chris before this, my light fell over right as we started the show. And so we might see some shadows sweep through.
All good. It happens. And I like to keep those things in the interview because it shows like, look, we're real, things happen. Yeah. I had lighting issues right before this too, but I had to plug it into an outlet over here because it was like taking too much power of my computer. But we're going to keep rolling with it. So
we're good.
Yeah. As long as it doesn't fall over and knock you out or something, I think we're good. So tell me a little bit about how you've been scaling. I know we talked about it before we hit record. I think you said you have about 8 virtual assistants or so. How are you divvying up the work? What are you having them work on? And has that been difficult to manage as you scale, under your own banner?
Yeah, I mean, for sure. I mean, starting a business is hard, right? I mean, if it wasn't, everybody would do it. But at the end of the day, the things that are difficult what I found in life. The things that are difficult are the things that are most rewarding. And I used to in life try to run away from those difficult things. I mean, I even think about going back to like my college career, and I started out. Like freshman year, I didn't know what I wanted to do. I went to IU, Indiana University. They got a fantastic business school, but it's hard and you have to take a bunch of hard classes and you have to get accepted and all this. And I was like, that sounds hard. And so I started out as like, and no offense to anybody, but I started out as a sports marketing major, which was there was just no acceptance. And so I started out in there and I'm like, I could do that. And then I heard what you make though as a starting sports marketing major. And I was like, well, all right, I better suck it up and get into the business school. And what I found though, that's just one example of like, I used to run away from some of these hard things. And now I look for them. I mean, I look to get uncomfortable. I look for these difficult things because I know in those things I'm going to grow and I know they're going to be the most rewarding. And so anyway, back to your question. Yeah, I've got, I think about 8 virtual assistants at this point. I've taken a different model. So some people, like, you can't do everything that needs to be done in a business, right? So there's a couple ways to go about solving that. One, which I think is the most common, is you partner with other people that have, complementary skill sets, right? Well, and that's great. That's great. If you have people that you really resonate with and know that, like, you got to treat it like a marriage. And if it's somebody that you think you can really be married to for 30 years, then by all means partner. But partnering is also the most expensive thing you'll ever do in a business because you're giving up a significant amount of equity. And so for me, I just approach partnerships very carefully and very slowly. So instead of going out and trying to find partners to do this, I've decided that I'm going to scale it up on my own, and I'm going to bring in contractors and virtual assistants to fill out my team. And so I've got, currently I have an underwriter who sources the deals and does the initial spreadsheet work to say, are the numbers good? Is the market good? How's crime, right? Doing the initial analysis on the markets and the deals. I have my assistant who really, she's like a high level assistant. I'd say she's more like our operations coordinator. She's the hub, making sure that everybody's meeting deadlines and doing what they need to do and keeping me on track because I'm flying around with kind of the strategy and vision stuff and trying different things. And then I've got, I do a podcast. It's called Ritter on Real Estate. It's all about investing in multifamily. And so I've got several folks from, the folks who edit my podcast to a girl who advertises my podcast and kind of like a booking agent, so we've got these defined roles that people are playing. And then, I've got several other virtual assistants kind of scattered through there that do different things for me. But yeah, it's just about, being able to really, it was something that I struggled with. Like, how do I just find somebody like on the internet and I'm going to give them this responsibility? I've got a bookkeeper. That's another one who's a virtual assistant, but I've really dove into it now. It wasn't like I hired 8 or so out of the gate. As I started with 1 and that became 2 and but I had specific roles that needed to be filled. And I think that's important. You have to have very clear definition of what you want them to do. And over time, it just grows. And I think I finally reached like a new level where I actually had one virtual assistant managing another virtual assistant. And that's like a whole nother level of like hierarchy. But yeah, no, it's working really well. I found some fantastic people all over the world to help me grow my business. And the thing that I didn't really anticipate, because I'm like, how do you build a culture with virtual assistants, right? Who are not technically part of the company, they're all contractors. But what I've really enjoyed is that these folks have really rallied around me because I was working at a larger private equity firm before this and using a few of the same virtual assistants. Well, they all came with me and some had options to stay. They wanted to come with me and they really kind of said, we believe in you. We want to be a part of this. We think this can really grow and it's exciting for them too. And so it is possible to build a culture, even among a group of kind of disparate folks coming together. So it's a cool journey and learning experience for me, and definitely an experience on how to delegate and how to delegate virtually. And the most effective tools to be able to do that. Like I do a lot of like Loom videos where you can, record yourself doing something to train, like as a training tool instead of, having to take the time to get on the call and kind of walk through it. They have that video that they can go back and they can refer to over and over again. And so I could do a video of me doing it one time and then anybody can watch it and know how to do it.
Having the same kind of experience with my team, and I have one managing others as well. And you're very right there that, they really believe in you and the mission and they want to grow with you. I've worked with a few of mine for like a year or two plus, and they want to stay with me and they believe in the message and they listen to my podcast too. And I'm like, that's so cool. Yeah. Meanwhile, I've tried to find a few executive assistants or like one person in my market in Denver. And like, I kind of found somebody and they didn't really last, and then somebody else. And part of it's on us as well as the entrepreneur, because sometimes, like you mentioned earlier, it's difficult to clearly define the roles and what do you want them to work on. You kind of hire them a little too early and you're like, hey, I don't really know what you should work on just yet. Yeah. I don't know if you've dealt with any of that, but that's been something that I kind of struggle. I jump the gun sometimes.
For sure, I have. There's an example going on right now where I'm kicking off a newsletter, a weekly newsletter, and it was supposed to start 3 weeks ago, and it hasn't yet because I think I told you at the beginning, I've got like 3 real estate deals under contract right now. We're working through a ton of stuff. It's all really good stuff, but it's just prioritization. Yeah. And so, but I have somebody that's like on point to do the newsletter, and she keeps reaching out. She's like, hey, we're going to do it this week. Like, what's going on? It's like, so yes, that those things can happen. But, I think that, that just shows me that like when I see those things, like where I'm clearly the bottleneck, that then drives me to say, okay, how do I remove myself from being the bottleneck here?
Yes.
You know, and some things you have to, like, this is like the initial setup. We got to get the template right. It's got to look great. It's got to go out, you know, and have a great message. But once that process gets rolling, you know, I can remove myself because of building up the systems we have so that I'm not the bottleneck.
Right. And it's a constant, you know, struggle of figuring out what's that next bottleneck, how to remove it, who can you put there to fill that hole. And I guess that's kind of entrepreneurship. And you never really, quote unquote, figure it out all the way because things are changing and evolving. And real estate transactions, you know, it seems like every single transaction is completely different and you run into a new problem that you didn't have on the previous ones. I'm sure you can speak to that as well.
Yeah, I mean, for sure. And, you know, with like, you're just improving through iteration, right?
Yeah.
Like that's the important thing. Like, you got to get started. You know, you may misfire, you may jump the gun, but you just got to improve through iteration. And what I mean is, like, each time you just do it better, you know. And that's what I tell my team. That when I was a consultant, that's what I told my team. It's like, look, I don't care if you're perfect. Like, you got to try to be perfect, but all I care is that you did it better the next time than you did this time, you know, and you're always improving. And so if we're always improving, then it's amazing how much you can accomplish, you know, over months and years.
Definitely. So what are some of the goals that you have now, you know, with your business and your acquisitions? Do you have target amount of units or a certain timeline, or are you kind of just seeing how things go? I'm just curious to hear what your goals are and what your vision looks like for your new venture.
Yeah, that's a good question. You know, I don't know. A lot of people throw out like unit numbers. Like, I want to be 10,000 units or 1,000 units or whatever. But like, to me, that's kind of arbitrary because it depends on what you want. Like, why do you want to be at 1,000 units or 10,000 units or 100,000 units? Right. For me, it's more about building a business that I can be proud of, that I can, you know, create a ton of value in, and the number of units will come, but that's predicated on the amount of good deals we can find, right? Because I could just go out and acquire a bunch of bad deals and be at 1,000 units like next week. But it's, you know, finding a business where if any metric that I would like to track would be the return that we give to our investors. That's really what matters to me. Like, I would do less deals as long as I know they're good deals and I know that we're going to get those returns back to the investors. To me, this is a 30-year game. Yeah. You know, this is not a flash in the pan. It's not build it up and then put it on autopilot. Like, I love what I do. And I love building, I love the real estate aspect, and I also love building the business. And it's a consultant in me. I love improving process. I love implementing technology and doing this and seeing this grow. Mm-hmm. And I love building up the people around me. So, you know, I'd love if some of these virtual assistants were with me for 5, 6, you know, whatever years, and they can grow as well. Maybe at one point they become a part of the company, who knows? But that's what, like, those are the things that I really care about and track. And I think those investor relationships are like the most important. So managing those and just being somebody that folks can trust with their money, right? It's a big thing. You're asking people to send you at least $50,000, and you know, it's just a big commitment. So those are kind of more the things I track versus a unit count, or saying I want to be a certain dollar amount or whatever. I mean, as long as I have a business that provides the life that I want for my family, you know, lets me to have the flexibility to live the life that I want to lead, which I do now, which has been a huge accomplishment, and be the type of father I want to be and have the flexibility I want to be in my schedule, then that's really what's important to me. And from there, it's like all gravy on just like, let's see how far it can go.
That's awesome. And I love that your main metric that you would even look at is your return to your investors, because that shows that you are focusing on finding good deals instead of just aggressively buying bad deals to try to hit a certain metric. And I guess that kind of goes to show how important it is when we're goal setting, that we are actually asking ourselves, I wrote that down too, like, why do you actually want what you want? Because I was guilty of that. I think a lot of people listening to this right now are guilty of that. Setting a goal, I want to make 10 grand a month or 30 grand a month or 50 grand a month, but like, why? And also, what happens when you get there, right? Are you just going to feel empty and want to raise the goal, or is there a mission or a greater sense of purpose behind that? Yeah. And so asking why is what a lot of us don't do. So just a reminder to the listener, ask yourself, why do you even want what you want?
And the what next is a really good point, because like when we, going back to 2015, when we sold that business, I didn't have a what's next.
Right.
And so I spent time just kind of like
thinking and brainstorming,
semi-retired, like bored, kind of just being like, okay, what next? Okay, I feel like I did something great. That was cool. Now what? You know? And so I think, I think having that what next, always having that what next, I think is important. And like when you're setting goals, I think you said it really well. Like why do you want that? I think that's the really important thing. Cause like, it can't just be like, I want a Lamborghini. It's like, like
why?
Because the problem is you may want a Lamborghini. That's cool. But when things get hard, like that shiny Lamborghini is not going to get you through that. It's not going to push through to do the next thing that you need to do to get to the other end and be successful. Right. But the why will. Like, why do you want it? Maybe you want it because, I don't know, it was your grandpa's favorite car, and you want to take your grandpa on a ride in a Lamborghini before he passes. I don't know. I'm just making some up, right? But emotional attachment is what's important. Exactly. And the emotional attachment is what's going to push you through to accomplish your goal. Otherwise, it's all just willpower. And like, I mean, how many failed diets are there out there, right?
Too many.
Because it's all willpower. And willpower lasts only so long until you're like, screw it, give me a Cheeto, unless you understand, like, why do you want to lose weight? Like there's a technique. I think Tony Robbins does it. I don't know if he started it, but it's like, you ask 5 whys. So it's like, well, why do you want it? Well, why do you want that? Why do you want that? And you got to get like 5 levels down to really get to the root of what, what's really behind it. And you got to create that emotional connection to that goal.
That's so important, because when things get tough, you're like, I don't even really want a Lambo. I'm fine with my Jeep or whatever. Right.
Yeah.
The goal goes out the window, and so does your motivation. But if your why is, man, I want to achieve passive income and financial freedom so I can quit my job. Like I remember I worked with someone at an oil and gas company, and they were a service worker who was they were on the shop floor working on the tools, and they literally had 12-hour shifts. And he'd be FaceTiming, his kids at lunch and stuff, because they were at home with his wife, and he wasn't able to be there all day long. So something like that would be an extremely powerful why. Like, man, I don't want to miss my child or my children growing up because I'm stuck at this job 12 hours a day, 5 days a week. And he had a 1-hour commute on top of that each way. Like, when do you ever see your kids? You just go home to sleep at that point, right? So I think that would be a way more powerful why than just the Lamborghini or the shiny car that a lot of us have on the vision board, myself included, but it's more of like, the icing on top of something that would be cool to have, not that would truly change my life or my happiness level.
Yeah, that's exactly right. Because like, you got to figure out that thing that's going to push you to work that extra hour when you don't want to.
Yeah.
Like that's my experience a lot, is like, and I've got 3 little kids. And so it's like they keep us busy and they keep us up, and it's like finding time to work in between. But, you'd be working, it's like, oh God, I'm done. Like, I'm gonna go watch TV. And it's like, what's that thing that's going to get you to work that 1 extra hour? Cause that's often what I'll do. I'll be like, all right, no, 1 more hour. I'll make 5 more calls. I'll do whatever. And just 1 more hour. And just, you do that every day. It's a lot of hours.
I love that. Yeah. There's I don't know if you ever listened to like Ed Milet. I think he had a video where he talks about that, 1 more push up, 1 more call, 1 more mile. If you just do that 1 more, kind of like what you said right there, it compounds over time. And I mean, imagine what that would do over a year, 5 years, 10 years. If you do 1 more than the person, your competition may just be like, I'm good for today. I'm just going to go watch Netflix. And you sat there for another hour and you made 5, 10 more calls. That compounds over time. And I mean, that turns into tens of thousands of phone calls and conversations and opportunities that someone else is maybe not getting because they're checking out a little too early.
Yeah. Yeah. Well said. I think that's right.
It's a great reminder for myself too. Cause like I mentioned earlier, I'm always living this 4-hour work week type thing where I'm like, I don't, I'm kind of anti-hustle. I want to relax and go kayaking and hiking. but there's someone out there who's doing one more, who's going to take my business and maybe grow their podcast faster than me. So it's almost like that friendly competition. So great reminder. So thank you for that.
Well, and I mean, for you, you only got to get to like what, a 5-hour work week. Like that's not
bad. That's not bad at all. And the beauty too, I guess we're all in different seasons of life and everything too. But I mean, I don't have, children or anything just yet. So kind of like you mentioned earlier, I don't know if we were recording it just yet, but you were able to do 20-hour work days if you needed to when you were doing consulting. Whereas now your priorities have shifted where you want to spend more time with your kids. You don't want to be buried away or flying on a plane, half of the year or whatever. Right.
That's right. Well, and just going back to talking about why, I mean, that was my big why when it came time to decide if we wanted to sell the company. For me, I had just started a family. I had at that point, my wife was actually, sorry, I had to remember, she was pregnant. Yeah. She was pregnant. So, but I was looking forward to I'm going to have a family. And I really had this moment on this plane. Like I remember this moment where it was probably 6 a.m. I'm at O'Hare, which is such a pain in the ass if you've ever been to O'Hare. And I'm about to take off on this plane flying. I think we're flying to San Francisco. And I had this moment of what am I doing? I'm leaving, all this behind. So this was actually a little after when my daughter had been born, but it was like, what am I doing? Leaving all this behind, leaving my kid behind, got to fly out for a week. I see him, and I'm like, this is not the life that I want to lead. This is not the type of dad I want to be, I want to be around. And that was a big why for me of selling the business and then finding a new career that would allow me to have that flexibility. What was my kids?
100%. And I see that happen with a lot of entrepreneurs. And I've talked to a lot of guests on the show that have had the same sentiments where maybe it worked for them at some point of time, but then things have changed for them. And, they want to be home or they want to not be traveling 80 or 90%. I remember back in the day when I'd be looking at the consulting jobs, it would tell you the percentage of travel required. And it would say 95% travel. And I'm like, gosh, you're traveling every week, all the time, holidays included. And sure, you get so many points, you could fly somewhere for free on the weekend. But I mean, it's most of my consultant friends, now that I think about it, they were all single. They're still single in many cases because they haven't been able to meet somebody and settle down because they've been traveling and working so many hours for so many years. So I think that's very important. And then I wrote down as well the 5 why exercise. I've heard that a few people talk about that, but if you just go 5 whys deep, you can really try to figure out what is your true why, what is your true motivation, and does it make sense, right? Because sometimes we want the Lambo or the money, but when you dig deeper, you're like, well, I actually want the freedom, and you may not even need all the money that you think you need to achieve that time freedom.
Right. And I think that's a really good point because there's a cost benefit to everything, right? It's okay, maybe you've got 1,000 units. Well, how much harder do you have to work to get to 10,000 units? And what additionally is that really going to bring to your life?
Right.
I think people, I had one of my old partners used to say this. He's like, everybody wants the asset, nobody wants the liability. And it's because it's a two-sided coin, right? It's what do you want that big shiny thing, but are you willing to put in work to do it? And do you even want to put in that level of work to do it? And I think that's something where I talk to a lot of people just on an investing standpoint, where they're like, yeah, I want to be a syndicator. And I go through what my day looks like. And I mean, because I work harder now, I think, than I did as a consultant, but I like it better. Mm-hmm. And I go through what that looks like. Man, you have to do that. And that sounds really hard. And I'm like, I mean, maybe passive investing is a better approach for you. And I've got a solution for that. That's the solution. It's for busy people, that want to invest in real estate, or that people that maybe, want to put all the work in. Cause what I tell people is you really got to love it. If money is your motivator, then the juice isn't worth the squeeze,
right?
To be an apartment syndicator. You really have to love the real estate. I'm a deal junkie. I love finding the deals. I love putting them together. I love seeing the vision, of this crappy property and being able to have the vision of what it could become and being able to make it that, that's all fun for me. So
That's another
maybe I'm
great
weird,
point.
but
No, that's another great point is that you really have to make sure you enjoy it because trust me, like all the entrepreneurs listening right now who are trying to close that first deal or get your business off the ground, it seems like that will be the thing that makes you happy. But after a certain amount of money, I've talked about this with Trevor Mock, the CEO of Carrot, for example, on a recent show. And he said, I think $75,000 a year is like the number where after that, some study was showing that your happiness doesn't really increase that much. Like, yeah, you get to buy time back. You might have a personal chef and like life gets a little easier in some areas, but overall, your happiness doesn't go up that much more. But I mean, when you're struggling and you can't put food on the table, yeah, I get it. Money is an important goal and motivator, but that's going to change over time. So just a reminder for everyone out there listening, money can't be your only motivator. There has to be something more.
Yeah. And really, I mean, money is a terrible motivator because, like when we were, working on hiring at our consulting firm, I mean, we did research, hire other companies. And like, really what we found was, money would get somebody to stay around for, 3-6 months, maybe, but those people always ended up leaving because it wasn't the money at the end of the day. And so like the people that skip to job for like 10K here and there, I mean, ultimately, what you're leaving, you're getting more money, but what you're leaving behind is all the political capital that you gained at that company. Right. You're going and starting somewhere new. And to think that you're going to get promoted right away of starting somewhere new and totally having to build up your political capital is just, it's just probably not going to happen. But it was that money was not the motivator for folks. And I think that 75 mark is probably right.
I mean, I've definitely just seen that for myself. And I know a lot of people say that, well, hey, let me get 10 million a year just to double check, like I'll be the judge. So I get it. Everyone who's motivated and wants to blow past that in 10X, go for it. But just kind of have that warning in the back of your mind that, hey, maybe you're going to get there and you're going to have that, oh, what next moment? This isn't what I thought it was going to be. And if you're not enjoying what you're doing, if you're in a job that you took for a 10K pay raise and it's like even worse than your previous environment, not to mention what you just said there, the political capital, that gets overlooked so much, even in the entrepreneur business space, because your reputation is everything. If people hear that you screwed someone over or you took an investor's money, like you can't afford to have that happen even once or twice because like bad news spreads fast, right? So your reputation and your name, that's also everything. And so that was one point that I wanted to highlight, that when you're jumping from job to job, you got to restart all those connections, relationships. It takes time to build trust. You don't just get that overnight. So lots of great things that we're, touching on here.
Yeah. And I think the one thing I'd caveat that with is we talked about a lot about how money is like not the answer, but I mean, money can let you have a lot of fun. Right. Yeah. I am a capitalist for sure. Don't get me wrong. Like, I mean, I provide a lot of value because I create great returns for my investors, but I make money doing that. And I'm unapologetic for that because providing a lot of value. So 100%. By all means, like shoot for the moon, just do it for the right reasons.
The right reasons. That's what I wanted to really harp on here. Cause I've been kind of, sharing and spreading that message with my audience. Cause like, I think it's great, make money. Like that's awesome. Make a ton of money, buy the Lamborghini, but know your why, make sure to give it back wherever you can, help someone out in need who maybe needs, they want to buy you a cup of coffee, but really they shouldn't even be putting that on their credit card because they're that much in trouble. And so I like to meet up with people and kind of give time as well. And so a friendly reminder to everyone out there, if you're kind of seeing success, remember someone else who was in the shoes that you were in and kind of help them out as well if possible. And that can be by creating content like you and I do on our podcasts as well. Yeah.
I mean, and I'll just to say something there, because I've had some pretty profound personal experience lately with like I try to do the same thing. I try to be very open. I host a networking event monthly here in town for real estate investors, and it's all levels, from people that want to get started, people that have owned for 30 years. Yep. But it creates connections, and I try to be free with my time too. If somebody wants to get coffee or lunch, I try to keep spots in my schedule for that. And because I want to give back value, because a ton of people have mentored me, given me advice at the right times that'll let me get as far as I am in the, fairly brief time, really 6 years since focused on investing in real estate, to get as far as I am. So, but what I'll tell you is like, like it's about having an abundance mentality, right? You're familiar with an abundance mentality versus scarcity mentality, right? The abundance mentality is there's enough out there for everybody, and you can help people and you can help others grow. And as you grow and everyone grows, like the pie is big enough for us all to have our slice. And I think that's totally true, because the more that I've opened myself up to helping folks and taking the time to do that, and just if it's looking over a deal with somebody and giving them my thoughts or whatever, like I've had people, I mean, I'm partnering with a guy right now. We're buying a 29 unit apartment building together because he brought me the deal and was kind of like, I mean, he had some experience, but he's kind of like, hey, I got this. He was calling sellers. The seller actually wants to sell. And he's kind of like, well, now what do I do with it? And so he put me aside after my meetup and we talked about it, and I went through everything with him, spent a few hours, and then we ended up partnering on it because I can help him get it over the finish line. But that wouldn't have come if I wasn't open to spending that initial time with him and helping him through the process. If I was just like, oh, now I'm too busy, so I think just being open to those, and I've had that happen recently in kind of several different ways in my life where, you give back, but you get back kind of 10x of what you've given. And so I think that's important. And I've seen some people like messaging that lately on LinkedIn, some LinkedIn friends, and talking about that abundance mentality. And when your inclination is to like pucker up and like hunker down like that, those are the times when you really have to put yourself out there and like really start giving. And I think it for whatever reason, it has like the opposite effect. You think it works.
I remember hearing it, I think in Think and Grow Rich, Napoleon Hill talks about the mastermind thing where when two minds are together, a third mind is created. So if you look at that as an equation, it's like 1 + 1 actually equals 3 instead of just 2, because you're creating that third thing. And so there can be that abundant mindset, and it's not just that pie or zero sum game where if you're winning, that means I'm losing. No, we can both win. And there's so many opportunities for that if you just are open to checking out some beginner's deal that maybe isn't a deal, but then the next one is, having that open mindset. So that's so important. And I know you've got to run to an appointment here in a few minutes, so I want to be respectful of your time, but is there anything that we missed or any key takeaways that you'd like to share with the audience that we missed?
Man, I mean, we had a great discussion. We didn't talk much about real estate, which is usually what I spend my time talking about. But I love I think the just core to being successful, talking about those mindset things that we covered. I think really are so much more important because they just cover any industry and any profession. So I'm glad we got to talk about those things. Yeah, the only other thing I would say is from a real estate perspective, if really what I do is I create investments for folks to come in and invest passively and invest alongside me. And so we all pool our money together and we go out and we buy big apartment buildings and we fix them up, kind of like what you see on HGTV, except like 150 units at a time. Mm-hmm. And we hold them for 3 to 5 years and they cash flow. While we're holding them, we give that cash out to the investors, then we sell them and we all share in the appreciation. And there's a lot of tax benefits along the way. And so that's really the core business of what I do. And I do that because I found that's just the most effective way I've found to build wealth. You can go out and I invest in other things. And I've got crypto, I've done some angel investing, other things. And like, those are great, but those are moonshots, right? So like the probability of success is pretty small versus really what I focus the core on from a risk adjusted return basis. There's not much better than buying, like I said, cash flowing businesses that have been there for 30 years and just helping them make a little more money and getting a double digit return and doing that. So that's what I focus on in my core day to day.
That's incredible. And I love what you said there in terms of just treating it like a business. You are acquiring a business that cash flows. It's been there. If it's been there for 20 or 30 years, that's a good sign that even if it's not properly run or run 100%, there's room for opportunity and growth and for you to see that appreciation and return on that investment instead of like a startup that may be riskier or crypto where you're like, oh, okay, it just dropped to 30K or 50K or it's all over the place and no one really, maybe some people know why, but I don't really follow it very closely. And so you don't have as much control over those types of investments as you would a real estate asset. And where can our audience go to learn more about that and connect with you? Is there a good landing page or website I can send them over to?
Yeah, you can just go to kentritter.com.
Okay.
That's my home base. You can learn more about me, access the podcast. You can also go to the podcast, Ritter on Real Estate, anywhere you listen to podcasts. And then you can access my blog on the website. They've got some good like beginning investor resources, like term sheets, cool. FAQs, some different things that folks can use. So I set it up. I want it to be a resource for people as they're getting started.
Yeah, that's perfect. And then of course, if it makes sense and they've got, the cash to invest, definitely check that out. So kentritter.com and then the podcast Ritter on Real Estate. I'll be sure to link that up in the show notes. And Kent, thank you once again for your time. I really enjoyed our conversation, even though we didn't talk a whole lot about real estate. I love the mindset and the business side of it. So that way, the people in our audience who maybe are not in real estate can also take away a lot and implement those things in whatever business that they're in. So thanks again, Kent, for your time.
Absolutely, Chris. Thanks for having me. Really enjoyed the conversation, man.
Likewise. We'll be in touch. Hey, everyone. Chris Bello here. Just wanted to thank you real quick for listening to the show, whether you're listening on podcast or YouTube or wherever it is that you may be listening. I wanted to make that quick offer about real estate help. I am in the real estate business. That is my main business and how I make all my income and my living by helping others buy, sell, rent, or invest in real estate across the nation. If you have any questions at all, go to chrisbello.com/real estate. Again, that is chrisbello.com/real estate. I'd love to see if I can help you out in my markets. And maybe if you're in a market outside of the ones that I'm focusing on right now, I'd love to connect you with a real estate professional who can help fulfill whatever needs or services that you are requiring. So again, go to chrisbello.com/real estate. A great thing is when I connect you with a vetted professional, if I'm not able to help you myself, is whenever a transaction closes, I'm actually able to get a referral commission. So that can be a great way of thanking me for my content. It helps to support the show and it helps me to continue to spend time bringing on amazing guests, doing these great interviews, spending a lot of time on creating content and making sure that I can bring you the very best information that you need to grow professionally, emotionally, intelligently, and in every single area. We're all working on getting better at everything. And so my focus and expertise is in real estate. I'd love to be the one to help you again. If you're not interested in that, no worries at all. Please continue to listen to the show. Make sure you leave a review. It helps so much in getting new followers and sharing the message. And thank you once again for being a listener. I'll catch you on the next episode.